Welcome back to Alpha Recap, your aftermarket breakdown of the day's biggest market moves. We're fresh off the close, and as always, if you have questions, you can reach us at stockalpha.ai.
Hey, great to be here. The tape today had a clear story. Breath came back and small caps led the charge. Felt like new traders were willing to take a bit more risk.
Right, and the headlines were pretty tidy on that. Markets closed up, with the broad S&P ETF finishing about 0.5% higher. The tech-heavy NASDAQ finished up just under 0.6%. And small caps, the Russell-style ETF, finished up about 0.9%.
So what really stands out here is that small cap strength. When small caps outpace tech, it usually signals broader participation, not just a handful of big names propping things up.
Yeah, that tracks. There was a risk-on vibe. Cyclicals, energy, materials all picked up. But at the same time, Fed chatter kept a caution flag flying in the background.
Definitely. I mean, when you step back and look at this, it was a classic two-force day. Improved appetite for risk plus ongoing sensitivity to tighter policy down the road.
Exactly. Tech held up too. The NASDAQ-style ETF posted a modest gain, and that was supported by optimism around IPO pipelines and continued momentum in AI and cloud revenue themes.
And communication services had pockets of strength as advertising and media names saw flows. So it wasn't just old-school cyclicals. It was selective growth too.
Quick reaction. Small caps win the day.
Big move.
Let's unpack sectors. Energy and materials were constructive. Energy had some M&A headlines and a handful of tech-adjacent gains, while mining picked up as investors eyed a longer cycle demand story.
Right, and the real estate and utilities picture was mixed. Utilities felt the cross-currents from renewables policy noise. Some names hurt, some rallied on project wins.
Mortgage-sensitive real estate stocks were cautious, since higher rate expectations are a direct headwind for those businesses.
Financials move with the tape, but were sensitive to the Fed narrative. Banks are always repricing duration and net interest margin expectations when rate talk picks up.
And speaking of the Fed, there was a steady drumbeat of commentary suggesting the committee could face pressure to act if inflation stays firm. Analysts flagged voices like Kevin Warsh in recent coverage, which kept policy risk front and center.
So the tone was sort of, traders pushed into risk, but they had their fingers near the sell button in case Fed rhetoric tightened.
Exactly. Momentum was on buyer's side today, but that momentum was vulnerable. Analysts reminded folks that cyclical leadership can evaporate if inflation surprises to the upside and real yields jump.
And we had some fun headlines too. The space sector IPO chatter really caught attention and helped fuel flows into related suppliers and contractors.
Space always gets people excited. It's like rocket fuel for sentiment. No pun intended.
Honestly, I was a bit surprised by how much it moved names outside pure aerospace. Some industrial tech and software plays with ties to energy and logistics saw cross-sector inflows.
Let's pivot to a few notable individual names and themes. Quick hits so listeners know what stood out.
CVS got attention after post-quarter analysis. Folks were parsing margins and retail healthcare trends. The action felt more sector-driven than company-specific.
FedEx stayed in the headlines as well. The turnaround story continues to be debated. Traders watched execution and margin outlooks closely. It's being treated as a bellwether for industrial logistics.
Crypto-related equities also got a lift, which helped feed risk flows into small-cap and niche fintech baskets. Analysts are pointing to improving on-chain activity and a friendlier institutional backdrop as reasons.
Energy M&A headlines help select names outperform, and tech companies with energy transition exposure saw some inflows. So we had cross-sector themes at work, not just isolated rallies.
Short reaction. More breadth than just mega caps.
Not what anyone expected.
Let's talk technicals versus fundamentals for a second. Technically, the internals looked healthier today. Small cap strength alongside tech resilience implies more robust breadth than a market led by only a few giants.
Momentum indicators suggested short-term buyers were dominant, but fundamentals were mixed. Some cyclical sectors showed revenue and margin improvement, while others, like margin-compressed retail and mortgage-sensitive real estate, lagged.
Right, and the theme for traders was clear. Momentum gave room for incremental upside in cyclicals, but the path was likely to be choppy if policy signals turned hawkish.
Historically, rebounds led by small caps, while the Fed is hawkish, can be fragile. If inflation stays stubborn and the Fed tightens more than markets expect, cyclical names can get hit quickly.
Conversely, if data softens and the Fed signals a pause, small caps can sustain leadership into a more durable rally. So traders are really watching the inflection points.
So what should listeners be watching in the next session? First, Fed speakers and comments. Any hint that the Fed is ready to act on inflation will sway daily positioning.
And second, inflation prints and monthly data. The market will be front-running those numbers. Firmer than expected readings would likely push real yields higher and hurt rate-sensitive sectors.
Third, earnings cadence and guidance. Companies are still reporting, and guidance or margin commentary will tell us whether the breadth improvement has fundamental legs.
Fourth, keep an eye on IPO and deal flow. The pipeline could sustain volumes and selective leadership in tech and certain cyclicals.
Finally, crypto and fintech flows. Renewed momentum in those pockets can keep volatility higher in small cap and thematic baskets, so traders should expect some episodic moves.
Bottom line, today was a constructive breadth-led rally. The S&P style ETF closed about 0.5% up, the Nasdaq style ETF was up just under 0.6%, and the Russell style small cap ETF climbed about 0.9%.
Sector rotation favored small caps and cyclicals, while tech held its ground. Momentum was positive, but Fed-related inflation risk remained a clear and present influence on the market's durability.
So for listeners, watch the Fed voices, upcoming inflation data, and company guidance. Those are the things most likely to shift the tone quickly.
Quick recap. 3 takeaways. 1. Breadth improved with small cap leadership. 2. Tech stayed resilient and IPO chatter helped growth names. And 3. Policy risk from the Fed kept a lid on complacency.
And a friendly reminder, this is market color and analysis for informational purposes only. Analysts note these moves and risks. This isn't personalized investment advice.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. Catch us next time for the next market recap, same place after the close. Stay curious.
Bye for now, and remember, if something in the tape had you scratching your head, go to stockalpha.ai and ask away.